Hi, I'm Michael Yardney and welcome to the first property market update for 2009. It's customary at this time of the year to cast an eye on the year that's just passed, celebrate the successes achieved, tick the failures, and consider the lessons to be learned and applied to the new year. Well, we live in interesting times, don't we? We finished 2008 with a bundle of mixed messages. In any other year, it would have been a terrible result for our property markets. But against the backdrop of plummeting share prices and the subprime mortgage meltdown progressing into a full-blown worldwide global financial crisis, the way our property markets performed last year wasn't that bad actually, was it? Depending where you lived, property values in your state grew a few percent or dropped a few percent overall. Now, of course, we all know that the value of certain properties fell much more than that, some even more than 20%. And some segments of the market, in particular the higher priced properties, holiday properties and rural properties, dropped markedly in value. Sure, things were tough last year, and I'm not pretending that this year will be easy. It won't be, but it'll definitely be a year of opportunity. It's another year when the gap between the rich and the ordinary Australians is going to widen. Now, before you say, oh Michael, you're not going to recommend buying property again, let me remind you, and I'm sure you've seen this phenomenon, some investors seem to do well in good times and do even better in tough times, while others do poorly in good times and do even worse in tough times. Why is this so? If they consistently do well in exactly the same market when others don't do well, it must be something internal, something in them that makes the difference, not something external. If you've been to any of my seminars, you know by now what I'm talking about. You know I believe it's their mindset that makes the difference. Okay, I think fortunes are going to be made in 2009 because while some people will be sitting on the sidelines waiting for things to get better, a small group of savvy investors are out there already taking advantages of the opportunity that the markets present. I recently reviewed the house price statistics for Melbourne for the previous 12 months. Interestingly, in a year when the growth in median house price was only 3% in Melbourne, there were 10 suburbs with growth of their median prices around 20%. In fact, the top suburb had a growth in median price of over 40% and was St Kilda, a suburb which we targeted for many of our clients at Metropole last year. Now, of course, not all properties in those top suburbs increased in value to that extent. You need to know the right properties to target. Now, by the way, there were just as many suburbs where the median price fell by over 20%. Again showing you've got to be really selective in this market. Now, in the previous few years, during our property boom, even inexperienced investors did well. So did the speculators and the foolhardy. It seemed everyone could make money from property at the top of the cycle. But our markets have turned, clearly. They've moved on and all of a sudden the market conditions have changed and inexperienced investors, or those who didn't stick to strong property fundamentals, found themselves in trouble. No surprises there. This happens every cycle. Now, if I'm suggesting you consider buying another investment property now, does that mean that the markets have bottomed? My honest response is, I've got no idea, but the answer is probably no. My question to you is though, are you buying the market? Clearly the answer is no. You're investing in a property or a small number of wisely selected properties. This means that for astute investors, there are some really incredible opportunities around. There are currently some very motivated and at times desperate vendors, and this creates some top buying opportunities for long-term investors. I know we've bought some real bargains for clients in the last few months. By the way, just in case you didn't know, neither I nor the team at Metropole sell any properties, yet our buyers agents have access to every property on the market for sale. We represent the purchaser, both home buyers and investors, and help them research, negotiate for and acquire properties. Interestingly, many of these are currently silent off-market sales that we're getting from desperate vendors. In turbulent times, you need the sound, independent, experienced advice like that we can give at Metropole. So whether you're a beginning or an experienced investor or a home buyer, there's no one who's going to protect your interests quite like the property strategists at Metropole. Come along to one of our free boardroom briefings in Melbourne, Sydney, Brisbane or Perth. Just click the link at the bottom of this video to reserve your place. Whether you're investor or home buyer, give us a call or click on the link. You can call us on 1300 20 30 30 to find out how we can assist you. Now, back to my question before. Have the markets bottomed? Probably not. Having said that, my view of the property market could be summed up as follows. I've got really strong positive views of our property markets in most of our capital cities in the medium to long term. But sure, I'm certainly aware of potential short-term problems related to the credit crisis and poor market sentiment, which means you should be looking for the right property at the right price in the right location with the right rental income. One that you'd be happy to hold in your portfolio for the long term, and one that was bought sufficiently below market price so that even if the market fell a bit further, you'd still have bought well. Now, just to make it clear, my strategy for this time in the cycle really is to continue what I've been talking about and doing personally for years. Buy the right property, one that has the elements of scarcity, which will always make it appealing to owner-occupiers because they're the ones who push up prices, as well as to tenants. Buy at the right price. Currently this is below market value, at a price that even if the values fall another 5 or 10%, and I don't think they're going to in most areas, but even if they do, that you'll be covered. Also buy in an area where the market's always outperformed the averages, and then only buy a property to which you can add value, one where you can manufacture growth through renovations or redevelopment. Are you ready to explore the opportunities that are going to arise in 2009? We're going to keep you posted throughout the year in articles from Australian experts in our Property Update website. And you can always get the latest news from the media in Australia and around the world on the property news page of this website. Also, I'm going to keep you up to date throughout the year with my webcasts, these video commentaries, and seminars that I'm going to be running throughout the year. The team at Metropole are also going to be conducting free property briefings in Melbourne, Sydney, Brisbane and Perth to help investors and homeowners understand their local markets better. So please join us at one of these. If you're a home buyer or an investor, click just below to reserve your place at one of these free sessions. Now, by the way, if you didn't listen to our recent webcast, 2009 Property Boom or Bust, you can also listen live on the internet or download it by clicking on the link just a little bit below this video commentary. Let's make 2009 a great year. This is Michael Yardney.